When we say bettering ourselves, what do we mean? And what has this got to do with cryptocurrency investing? There is a critical first step of investing that can have catastrophic effects on your ability to succeed as an investor if ignored. Before we spend money on any investment in cryptocurrency, we first have to put in the groundwork and invest in ourselves in order to build the hardened, emotionless investor mindset needed to persevere in this market. To achieve this state of mind, we need a combination of studied and theoretical knowledge to really aid us with gaining the valuable lessons out of our real-life investment experiences. Essentially, this is like a mock exam prior to the real exam, where we prepare ourselves for intense studying to succeed in the real practical. Applying these practices through repetition and even just becoming informed on what is correct and what is not can assist in the time it takes to achieve a mentally focused state. The brain, when unconquered, becomes the biggest enemy not only to you but also to your account balance. If your psychological capability to handle impulse decisions and rationality in volatile markets is non-existent, it won't be long before your bank account falls to zero. This shift in mentality is needed regardless of what investment you make. However, the following most common enemies of progress are amplified 10 times over in cryptocurrency investing. To begin our journey in defeating these naturally occurring emotions, we must first identify them, break down their negative impacts on your long-term sustainability in the market, and finally, form practices to overcome them, aiming for our final goal of becoming conscious of when these emotions arise and being mentally equipped to come out on top every time they do. In no particular order, your biggest challenges will be greed, fear, denial, panic, depression, excitement, cockiness, and anxiety. As the cryptocurrency market is so volatile, you will feel a rush of these emotions as fast as the market goes from bullish to bearish, which coincidentally can change in a matter of days. The excitement, greed, cockiness, overwhelmed will very quickly diminish to delusion, anxiety, denial, fear, panic, and depression, and just as quickly go back to the good times again. The emotional turmoil is a completely new life experience for many, and many are not used to this, which means we must not only learn from this when we do experience it, but we also must be prepared to understand why it is happening and its effects on our logical thought processes. Greed. You will begin to experience greed after experiencing a good week or two in profit. You will at some point consider taking profit, but the gratification to feel larger profits will cloud your logical decision to actually bank some earnings. Fear. Usually the consequence of uninformed investing or investing more than you can afford to lose. Fear will strike you deep when you experience your first huge bear market or even intraday swing. Watching your holdings fall sometimes over 70% in a few days causes self-doubt. Denial. Denial will plague you when your investment decisions turn out to be incorrect. This will most likely occur when some extremely negative news is released or a scandal has been revealed. Your emotional attachment to the position will not allow you to understand your analysis was incorrect, leading you to hold a position until your capital is completely wiped, hoping it will one day return back to normal. Panic. You will feel panic during large intraday market swings, breakouts from counter trend lines in the opposite direction of your investment, and when negative news causes fear in the market. Again, this is mostly down to investing without doing the groundwork. Your thought processes forget the overall long-term bullish market, and instead your entire energy is focusing on a single candle that has spiked down 30%, leading to panic selling in a loss. Depression. One of the worst consequences in investment, depression begins to creep up after a period of strong emotional distress. This can be a result of the above emotions taking their toll over time, or from suffering large losses and selling just before the market reverses back to your target. Excitement. This is a more positive feeling and should be embraced better than the negative emotions. However, excitement handled incorrectly will lead to the same results as being unable to manage fear and panic. During periods of good news or breakouts to the upside, as an example, it is easy to become overexcited and start entering more positions from the thrill of making more profit. A recipe for disaster when the market reverses and you're stuck deep in loss. Cockiness. Soon after excitement consumes you, the dreaded cockiness begins to show. After a series of wins, correct calls, and withdrawing some profits, it doesn't take long before you start to overbelieve in your abilities to time and milk the profits. Many traders and investors become consumed in the mindset of, this is easy, I can do this every time, until all rationality is gone in investment decisions and you're entering trades at all-time highs and illogical levels. A very quick way to empty your account to zero. How our mental state is prior to investing and opening our trading platforms will determine the effectiveness of our analysis and actions. We need calmness and clarity to work to our fullest potential. A simple exercise to achieve this state is meditation. Sometimes, no matter how much studying or research you do, nothing quite brings the results like the practical. Now that you are equipped with the knowledge of the emotional disadvantages that will come from emotional investing, you must program your mind through meditation. Following this simple plan for just 10 to 15 minutes daily, in the morning or before bed, over time aids in your ability to control your emotions and read the market's patterns in a crisp, almost spiritually powerful manner. Grab yourself a comfortable upright postured chair or cushion. Sit with your legs crossed, ideally in the pretzel, where your feet overlap. Make sure your surrounding is quiet and clear of distractions from other people. Should you not have a quiet place, simply grab some headphones and search YouTube for calming meditative music and frequencies. Make sure you have a very calming alarm set for 10 to 15 minutes. Close your eyes and begin to focus on your breathing. I recommend deep breathing purely from the nose. This is much easier for a beginner and effective for a returning meditator. Begin to gradually put all of your focus on the breathing going in and the breathing going out of your nose. Try counting to 10 if you are struggling to concentrate. This will not be easy in the beginning, but you will know when you begin to shift to a meditative state. After a while and the time is up, allow yourself to slowly come back to the present from the meditative state by the alarm you set prior. You will begin to feel clear, extremely focused and woken from within, ready to take on the charts. Write down in your course notepad how this affected your chart analysis compared to a normal state, and how you felt better physically from doing this. This will become a game changer in your investment journey once you apply these daily.